if you have your cell phones and your cell phones have internet access, feel free to check it out. What is on our website, David? And you should stand.
Tons and tons of free information to help you guys understand the process of buying, selling a practice, employees, wills, commercial leasing, etc.
Our website looks like this. Let me just...
It also has pictures of us.
Yes. So that's me, that's David, that's Lubisa, or as Maria pronounces her name, Lubitsa. I was offended yesterday. I see Maria. I'm like, Maria. She's like, where's Lubitsa? I'm like, oh.
That was the first question. I was happy to see you.
She is the other lawyer in our office, yeah.
She's our employment law go-to specialist. 400 articles, lots of newspaper stuff and legal trade publications, videos like the one we're doing right now. We have another website. David, do you want to explain this website here?
Dentist Legal Forums. So one thing we've done to help people out is we've automated some of the processes for preparing legal documents for dentists. It's a place you can go cost effectively, quickly from the comfort of your own home, pajamas, fuzzy slippers, do some of your own documents like a letter of intent if you're going to think about making a practice acquisition.
I created my wills using our software. So that's more or less what the Will-O-Matic for dentists look like. It's a kind of questionnaire, asks you a bunch of questions, and then you can download it. And this is actually a dentist's will. When I flew up to Kenora and I wanted to write the trip off, I said, quick, we got to do your wills. So before we started drinking, not after, we did her wills, and this is her will that you guys saw. It kind of looks like mine. And right now, for the next little bit, we're going to be talking about maximizing the value of your practice before selling, right? So maybe if you're not in this area, you're not looking to sell, you may be looking to buy. Eventually, you'll learn a thing or two, right? Leading up to the sale, really important that you produce. $1 million practice. Our client was buying it. Took a little longer. We got some financials, updated financials. The billings had dropped by $100,000. Guess what it did to the $1 million purchase price? Down by $100,000. Our client picked it up. So we encourage sellers, keep your production levels up. This is actually the back of Ed's car. That's where we took this picture. He brought a lot of cash, the wrong cash, down to Bermuda. So
remember, people don't want to pay for the future value of the practice. They want to pay for the current value of the practice.
Strong team. So team. We don't use the word staff. Why not, David?
Because they're your team members. They help your office run like one cohesive unit and help work together for the common good.
Team, effective, efficient. They're motivated. They want to continually improve. Staff,
support each other.
Staff are just cogs, replaceable. We use the word team. And you want a strong team because for a purchaser taking over, it's going to increase, hopefully increase the goodwill. Okay? It doesn't end up like a line on the financial statements, right? They're paying for your team members. However, the financials reflect the efficiency and effectiveness of your team. Okay? Does that make sense?
Something to consider.
Team agreements. And if you can't see the bottom of this little cartoon, it says, I didn't mean to steal your clients. You forgot to mark your territory. What did we learn about associate agreements and what happens if you don't have an associate agreement? Can they set up shop across the street, solicit patients, take copies of patient records where they've been the exclusive provider, and get staff to join them? Yes. So it's really important, especially if you're a seller, to have your team on contracts. Because the purchasers, we had one deal where nobody was on contract, and the liability, okay, this is going back to Mike, your original point about your friend, the liability for all of those team members, if the purchaser came in and just terminated everyone, $200,000. Really scary for the purchaser. So what we did is we basically said to the seller, we have to reduce the purchase price. And after some back and forth, the purchase price was reduced in half. The seller also agreed to cover 100% of the costs if the purchaser terminated within the first 3 months. So to avoid all of those things from happening to the seller and thereby reduce the purchase price, put your staff on contracts, right?
Absolutely. And they're not staff, they are...
Team, sorry, my apologies. The landlord, you guys all, some of you may have to deal with someone like him or her. Some of you may own your own building. What could go wrong? Why do we care about the lease? How many of you here are leasing space? Yeah? Most? You guys own your own practice? Okay, great. Fantastic. You may be the landlords, right? Okay. So, David, what is the problem that we typically come across with respect to landlords and leases?
Landlords are looking for usually three things. They want everyone to be responsible for the building, they want to collect signatures and guarantees, and they don't want to pay a cent. It's all on the tenants. So these guys, who are usually the devils in the deal, what they try to do is they try to extract for themselves maximum value.
What have we seen?
We have seen, for example, for someone asking to have the lease assigned from the seller to the buyer, they've asked for a flat fee of $40,000 just to consider the assignments. We've seen other situations where they've tried to say, I want a percentage of the practice sale price. We've seen other times where someone said, I'd like to assign the lease to a buyer, and the landlord had always wanted them out to bring in a different type of tenant. And there was a clause in the lease that said, if you ask for an assignment, it's an act of demolition, and I can kick you out, and they got kicked out. And then if you have a practice with no place to go, you have no value in your practice.
Do you guys know what a demolition clause is? Some of you do.
Very important.
Oh my God. Practice, appraised for $1 million. Our client came in $850,000, accepted. The landlord, extremely difficult to deal with. The lease had something in it called a demolition clause, which allowed the landlord to effectively terminate the lease, kick out the dentist for the purposes of demolishing the building and erecting like a condo. Okay? We said to the landlord, can you get rid of this clause? It looks scary and the banks are afraid, and the landlord said no. And there was condos all around, and the building was half empty. It looked really bad. So guess what happened to that $850,000 purchase price? Woo! Try $500,000 and $500,000. Half of what that practice was appraised for. That's what it's sold for.
Because no one would buy the practice with the clause and with that fact pattern of there being condos around a half-vacant building. They could smell the writing on the wall that the place was going to be demolished soon in favor of a condo development.
So our client bought it for half price and moved it, right? And so you got to be real careful with demolition clauses. Lots of examples of practice appraised for $800 goes for $500 because of the presence of a demolition clause. If the landlords don't want to get rid of the demolition clause, there are certain things that we can try to do, like get them to agree not to use a demolition clause for like 10 years. Something like that may work, may satisfy the banks and the purchaser.
There's lots of negotiating tricks. So for example, we do this day in and day out. We do commercial leasing for our dentist clients. So there's lots of tricks you can do in negotiation points, but the lease is a very big component of your dental practice and carries a lot of inherent worth in it.
Yeah, the lease is the stickler, and it's often the deal killer. So make sure you review your lease and make sure there's no demolition clause, early termination clause.
And as part of your yearly legal recall exam, you should actually look at your lease and see how much time do I have left. Don't wait till the last minute to renegotiate this. Step in a couple years out and start a good dialogue with your landlord. You may get more concessions if you renegotiate early, showing that maybe you want to stay for longer.
How much time do you think a purchaser's bank or the purchaser themselves want left on your lease?
They want it like back-to-back renewals.
How many years total?
Probably 10.
At least 10. At least.
Banks tend to amortize the loans over 8 to 10 years, so they want to see that you have a safe place to practice for the length of the amortization period for your loan.
We've seen a lot of crazy things in leases. I mean, we've seen landlords say, we have the right to see everything. And I mean, do you guys know what audited financial statements are? You guys know what financial statements are. Do you know what audited financial statements are? Where you pay an accountant or an auditor $20,000 to audit your books, and we've seen in a lease the landlord has the right to audited financial statements from you every year. And I'm just shocked.
Because then when you say to the landlord, I want to renegotiate, I don't want to give you an extra $20 a square foot, I can't really afford it. You know, I've got a business, but it's not doing what you're doing. They're going to say, no, your business is worth $1 million, $2 million, $3 million. You can afford the rent. You don't want them to know that.
We're dealing with a couple of deals right now, and the landlords, they're just brutal. They want to see the purchase and sale agreement. They want to know how much is being paid. They want a percentage of the purchase price. They ask for it all. So that's why we have this lovely picture. Right?
So it's actually a picture of Michael before he's had his coffee.
Now, you asked, why would anybody sell shares? And Steve said, something to do with taxes. So when you're thinking about selling, it's called the lifetime capital gains exemption. There's a couple of requirements that the dentist personally has to achieve to qualify for the lifetime capital gains exemption. The idea is you could save, let's say, $185,000 in taxes if instead of selling assets, you sold shares. What is this thing? Who recognizes this? Ed, what is this?
Sorry?
What is this? What is this a picture of? What is
That's
that?
the MIDI drive in my sound system.
It's a subwoofer. Does anybody know what this is? It's a...
Backup tape.
Nope, not a backup tape.
I heard it over here.
The black box?
No.
Yes, say that out loud. A minute book.
What is a minute book?
Yeah.
When I create a legal person, this is it. The government documents go in here. The RCDSO filings, everything goes in here. The share certificates, this is the back of one, goes in here. That's the seal. That is your legal corporation. Okay? And you maintain it every year, right? And then when you go to sell, you're selling the shares of that. You're transferring that. Does that make sense? If you guys want to know more about how to qualify for the lifetime capital gains exemption, it's a very dry and dull topic, but I'll tell you this. People who do not set up their corporation properly get screwed royally because we had a my wife is Persian, so I get to say this. Persian dentist came to us. Her accountant had set that thing up for her. Her accountant gave her amazingly bad advice, and it was, your spouse and your daughter cannot be shareholders. Just you. And so she went along. She had this $2 million practice. She was the only shareholder. Then she wants to sell.
And sell and pay zero tax.
And pay very little tax. So she came to us and we said, why is it that your husband and your daughter are not shareholders so that all three of you could get up to $185,000 of no capital gains tax? And she said, I don't know. My accountant did this. And we said, wow, that's going to cost you. And she said, well, can't you just go back in time and fix it? And we said, technically no, because you've been treating this corporation as if you were the only shareholder. You filed documents with the CRA. You filed documents with the RCDSO. So what we could do now, and she's ready to sell now. She's ready to cash out now. We basically said you have to change the shares around, and your husband and daughter have to hold the shares, and nobody can sell for 2 years. She was not happy to hear that. I said, you got to take it up with your accountant. Is she still using that guy? I don't know.
I don't remember.
It was brutal, but set it up properly from the beginning, because one of the requirements to qualify and pay little or no capital gains taxes, you have to own the shares. And who can own the shares? Like I said, the dentist, their parents, their child, and their spouse.
What type of shares though?
No. For dentistry professional corporations, then there's limits.
Yeah. So David and I can't own shares of a professional corporation.
You're talking about voting. You're talking about voting shares, correct?
Before corporations were allowed in Ontario, there was also this type of
Hygiene
Technical
corporation.
Service Corporation, Management Services
No,
Corporation.
there was a tax. There was a capital gains, lifetime capital gains exemption.
Yes.
That had nothing to do with dentistry. Anybody, I think, could have had it.
Yeah.
Does that override your ability to use this instrument as well? Let's say you used 25 years ago and used your capital gains personally.
You get it once for your entire lifetime per
Even
person.
if you begin a corporation and try to.
What happens is there's limits. Okay, so
They know 20 years ago you used it.
20 years ago the limit was like, yes, so you have a limit. So it's not like it keeps refreshing. Once you use your $800,000 lifetime capital gains exemption, that's what it's called, which equates to about $184,000 of tax savings. Once you use it, you're done, unless the government increases the limit. So prior to January 1st, it was $750. So if you'd used your $750, guess what? Now you've got $50,000 worth of capital gains.
That was personally. I thought the whole idea that you're trying to say is create a corporation and you can refine new stuff.
No.
No, it's the ability. It's where do you get capital gains from? It's the sale of certain assets trigger a capital gain or a capital loss. Hopefully for you, it's a capital
That's a
gain.
lot of dentists when they had MERS and this and that. When they were in their youth, not us anymore. Used that exemption personally years ago. Is there a smart way to try to get it back using corporations?
Yes.
Yes.
Your spouse.
Or five of them?
Yeah.
Right.
It may cost you more for a spouse, but yes.
Here's the other problem. The other problem is it depends, like Stephen said, on the types of shares. Some shares qualify for the lifetime capital gains exemption, some do not. Have you heard of something called like equity or growth shares, and then the drugs and divorce shares? Have you heard of those? Yeah, so the equity or growth shares qualify, which basically means here's a share. Whoever owns this owns that company, okay? This is a growth share. As the company grows, the value of this share grows in your hand, okay? Now, Maria is my lovely wife, and I don't trust her. So I'm going to give her the drugs and divorce shares. Okay, if she leaves me, guess what? That share, I can buy it back from her for $1. Here's your $1. Thank you. This share will not grow in value. It's used for income splitting purposes only, and its value is essentially $1. So because it can't grow and I can redeem it, it can't qualify. There's no capital gain. Do you understand what I mean?
It could be a capital loss, though.
Well, it's $1. She gave me $1. I gave her the share. I bought it back from her for $1. So growth shares qualify. Drugs and divorce shares don't. So if you give certain, shares to your kids and you don't trust them, give them these redeemable shares. Income split with them. But if you trust your spouse, give her the growth shares. She can use the lifetime capital gains exemption when you both sell.
And there's a lot of great tax planning strategies your accountant can help you out. We can happily talk to you about it, but your accountant can help set up a family plan for you.
Yeah.
You have kids at university age, the kids are going to school and you want to get money in their hands on a tax-free basis, assuming they're not working. There's ways you can use this entity, this corporate entity, to do good financial planning.
So for the purposes of, we got to move quick, but to qualify for the lifetime capital gains exemption, you got to hold the shares generally for 2 years, although there's an exception to the rule. And you can just transfer your practice into your corporation more or less the day before you sell the shares, you sell the company. A little complicated. We can talk to you about that after. Another rule is the assets of the company, at least 50% of them, have to be active business assets. Not cash sitting around, not real estate, not life insurance investments. Those things have to be removed, okay, for the last 2 years prior to the sale. And then the final rule is on the day of the sale, 90% of the corporation's assets have to be active business. So sometimes what's required is a purging of the corporation's assets prior to the sale so you can qualify for the lifetime capital gains exemption.
So how does this fit into the topic today of maximizing your practice value before sale? Speak with your lawyer, speak with your accountant, make sure that you have maybe a structure in place that allows you to sell shares, because there is a greater value to you in selling shares versus selling assets, at least in terms of tax treatment. And $1 saved in not paying tax is $1 earned at the end of the day.
In today's market, sellers are selling
What are sellers selling?
shares.
Shares.
What do buyers want? Assets. They don't want the liabilities that come along with that corporation. They just want the good stuff. Extract the good stuff. Give me the assets. I don't want all the other leases and all the other stuff.
But it's a seller's market these
Seller's
days,
market.
and you guys, if you set your practice up correctly, can drive the deal your way and really save on taxes.
Yeah.
So again, what kind of shares, you're supposed to have a certain type of share to be able to qualify for the capital gains exemption?
Growth shares, equity shares.
Growth share.
Yeah. Okay, the process of selling. How do you sell? Get together a professional team. That's me. I'm the guy right here. David is not in this picture at all. I couldn't find a guy who looks like him. All right. First step, get an appraisal. They typically cost how much, David?
$3,000 to $7,000, depending on the size of the practice.
5 G's on average. Next, letter of intent. What is a letter of intent? Does anybody know? Stephen, do you know what a letter of intent is?
Sorry.
Oh.
It's all right. Do you still know? Do you know what? Do you want to take a stab? Yeah. What is it?
How is that? Is it? I guess it's an intent to sell. I don't know.
Correct.
But I don't know who's it to.
The purchaser and the seller.
Oh, okay.
They agree on the key
I
terms.
didn't know you'd already found a purchaser. That's what.
Before you spend thousands upon thousands of dollars getting your lawyers to draft documents that are thousands and thousands of pages long, at least agree on the main terms between the buyer and the seller. So a letter of intent is a miniature document that sets out the big ticket items: purchase price, closing conditions, will a deposit be paid, what are you going to do with associates of the team, and you get that done, then you move forward with the transaction.
So it's generally non-binding. We've seen really poorly drafted letters of intent. I'm talking napkins with a name of the seller, a name of the buyer, and a purchase price, and they bring it to us, and we're like, what? What happens to the team? What about the lease? Accounts receivables? What exactly is being bought? I mean, what happens to all these things? That's why we encourage people to use some software on our website to create comprehensive letters of intent.
Because the cocktail napkin contracts are always the ones that end up in the courts.
In the courts.
And then in the law school textbooks.
This is, again, dentist legal forms where purchasers can pay to create letters of intent. Due diligence. After the letter of intent has been executed, due diligence. Ed, You've been through this. What do the purchasers want to know? What do they do in terms of doing their diligence? Because
They usually want to do, they want to verify the active patient records.
Patient count.
If goodwill was included in the
Perfect.
sale, for instance, if it was, so they want to do their version of that.
what's an active patient?
Well, basically, there's no two dentists in the world that will agree on that one.
Correct.
Okay. However, whatever formula you've used to represent the goodwill, they're going to want to take a look at it to see have people coming on more or less a regular basis and what that means.
Yes.
So they may want to check the goodwill count.
The charts.
They'll probably also want time to get their financing in place.
Financing.
So that's always going to be a big problem. They've got issues to do with the assignments to the landlords because the landlord may not exactly, as he's already said, is going to have a whole different ballgame on what the
Yes.
assignment's going to look like.
So the lease.
And go on with the lecture because there's a whole
This is great. I'm going to sit. Ed's going to take over.
There's a whole lot of
This is the segue into Ed's lecture tomorrow.
It is a big long list, and you should actually specify some of those things in the letter of intent. You want a lawyer to review things, the accountant to review things,
Equipment
an
inspection.
equipment inspection, of course. Have your financing for the bank in order.
A lot of trees die at this stage. The formal agreements. The diligence is done. The financing is being dealt with. Now the lawyers are drafting these big closing books with all the formal meat and potato agreements. We take the terms of the letter of intent and we just make it into a big agreement binding, right? Closing. This is our office. This is some of the tequila at our office. It starts, this is the Don Julio family. I actually have this bottle in my fridge upstairs. If you'd like to sample some, come on by. Nancy had some yesterday. What did you think, Nancy?
It was excellent.
Excellent. How many of you actually like tequila?
This is on the menu for today.
Jared tries some too. Jared, what did you think? It was delicious. Yes, and that's not even the best one. See how it goes like from there to here? And guess what? I have this new bottle that I picked up at Duty Free yesterday. It should be like around here because it's fantastic. So I encourage everybody, find me and say, Michael, tequila, and I'll just, okay, fine. We'll go to my room and we'll do a shot. At the closing, that's actually a dentist's arm. Notice the boxes are closed because we don't allow anybody to drink prior to signing because we don't want to unduly influence them. That's David's office, and this is David working away. I'm the one taking the picture. And the idea is, at the closing, a lot of documents are signed. There's an exchange of documents. We transfer funds. We deal with the landlord. And then we break out the tequila. Right? David, anything to add?
Yes, you should have more than one shot on closing.
Yes. Transfer of funds. Again, the back of Ed's car. Transfer of documents. Post-closing. Who here recognizes this still? What movie is this from? There's a lottery ticket in it for you if you can recognize this. Who said that? Jared? David, do you have a lottery ticket for Jared?
I do. Well done.
Jared, who is this guy?
Yeah, you just go ahead and exactly.
Okay, now how would you describe him to know people who've never heard or seen him before? As a boss, what kind of boss is he?
It's just pretty irritating kind of boss.
Like the worst. Worst boss
Micromanager,
ever.
in your face.
Yeah. So the point is, after your closing, you've sold your practice. If you're staying on, you're now a team member, and you may have to report to someone. Hopefully, it was not like that, right? But I like that. You watch the movie.
Now, when
Is it anything that you can do if someone is age like that boss? Is it anything that you can do and you have a contract and you sign that you will stay on the team for, let's say, a year?
Is there anything we can do to maybe...
Break the contract because of clashing of characters or something? Or the
Does
other
anybody remember the first segment? What is the typical answer for every legal question asked?
say it out loud together.
Depends.
Depends on
It
what?
depends.
Depends
The
on
situation.
how good your lawyers are at negotiating your contract. Some dentists are stuck. They can't terminate. If they do terminate, they have to pay the person who just bought their practice whole whack of money.
So we're talking about maximizing the value of your practice on sale. Sometimes, and this is actually a common theme, sometimes a seller, if they get 2 or 3 different letters of intent at different prices, some sellers will want to interview the prospective purchaser if the seller is going to stay on for a year. Again, if a seller stays on, that could increase the value of your sale because it helps with the transition. And there's been dentists who have sold to someone who didn't offer the most amount of money because it was the right personality match. And they've opted to go with that person rather than just the highest bidder to avoid a situation where you've got the crazy boss.
Yeah. Post-closing. Yay, maybe you're staying on afterwards, maybe you're not. You got all this cash. What do? You come to Bermuda with us. You go to Turks with me. You go to Hawaii with David. You come with me to the 7-day Caribbean cruise. And Jamaica, our new outreach program. This is going to blow your minds away. Okay, so I was in Jamaica last month with my family. That's my lovely wife and little guy there. And I met this crazy guy. Oh, he's not in the picture. His name is Papa Joe. He's an American, part of an organization. What they do is they bring dentists and students down to provide free oral care to the locals in Jamaica. And Sandals donates the rooms for free. So I was shocked and impressed. I toured around. So, I mean, this was the Beaches Resort. Ed, have you been to a Beaches Resort? Has anybody been to a beach? You've been to a beach? What are they like?
Fantastic.
Anything better?
I've only been to Turks, so I don't know.
Tell them about Turks. I was in Turks. It's amazing, right?
Yes, I know.
It's amazing. So Kennedy
It's great
Seminars.
family. It depends what you're looking for, right? It's
Yeah.
a great family spot.
Yes.
Oh,
Like
amazing.
it's, I don't know if you're single. I don't know if it would be a great place for you.
Right.
It depends what you're looking for.
Depends.
Sorry, it depends.
Yes.
So Sandals and Beaches, what they do is,
So I'm going again in March.
I'll see you there.
With Michael.
Are you doing that?
Yeah.
Kennedy one?
Yeah.
Yep.
No, I'm not presenting. I'm just there with clients.
Oh, you're there. Okay.
Yeah, so what's happening is we found this outreach program, so we're going to start, it's basically from end of August to mid-November, Sandals and Beaches will donate rooms for free. You stay 10 days, you volunteer for 5, and it's at a different resort every few weeks. So some are Beaches resorts, some are Sandals, really inexpensive for students, really great experience to give back, and really fun, because if you've ever been to a Beaches, I mean, taking tequila shots with Elmo and then going down that slide, nothing better. Nothing better. Just don't go down face first. Hurts. Yeah, okay? So that's what you want to do post-closing. Really fun stuff.